Thanks so much for tuning in. I'm your host, Neeraj Shah, and we're in conversation, or we are going to be in conversation with Ritu Arora of Allianz. It'll be really interesting during the course of this conversation to understand from her how does she see the world versus India. Where does she see the global appetite for what kind of Indian assets? And something that we just spoke about before we came on air is how relevant and how growing is this whole ESG argument within the Indian shores. It's not been the most prominent theme till now in India, but is it actually gaining prominence? So we'll talk about all of that. Ritu, thanks so much for joining in. I hope all is safe.
Thank you. All well.
Okay. So Ritu, let's start off with the basic argument. Taper, inflation, yields. These are now the most commonly spoken about terms when it comes to people being circumspect about what equities as an asset class could do in the second half of the current calendar. Where are you on this argument?
That's a very large question, Neeraj. You'll keep me talking for a long time. But let me try and address the different parts of the question that you asked. Starting with inflation. So we've, as a house, believe that inflation for now is transitory. One needs to, the base case would be transitory because there's a lot of pent up demand, especially globally. There's a lot of liquidity that is in the hand of the consumer. There's pent up demand. There's relief. So at least the Western world is seeing relief from COVID now, and consumption is coming back on the table. Supply chains are broken. Supply is impacted for various reasons, lockdowns included. And hence, we would definitely, and we have already seen US data which shows a sharp uptick in inflation. So inflation is definitely here. If it is sustained with growth catching up, then it is a very positive thing for the market. If we do not see growth, then of course it will be quite a challenge for the economies to sustain, for central bankers, for everyone. So that is how we see inflation. And I don't think India will be any different as we see relief from the second wave of COVID, which is very, very brutal. Also, I believe there's some kind of confidence that comes from the first wave, where the economic parameters were resilient and bounced back to normalcy pretty quickly. And I think that is where the markets see that confidence comes, that probably Indian economy will bounce back after the lockdowns are lifted and the health crisis is overcome. As far as interest rates that you mentioned, interest rates, I believe all the bankers around the world, it's going to be again a tightrope walking. They've been walking this tightrope for years now, but no relief for them because a spike in inflation will be witnessed. Economic activity, if it is not matching the inflation, it is very difficult for them to increase interest rates. So it is going to be a tough choice that will be made between leaving liquidity in the market or pulling it back. And I think we will see this evolving over the next couple of months.
Yeah, Ritu. So while persistently high inflation may not be a base case, would that argument be strong enough to act as a stimulus for portfolio managers and investors to take actions in their portfolio, and can that cause some reverberations in the market? Or do you reckon the markets will toe the line of the Fed and keep on believing the Fed every single time that Jerome Powell comes out and says that this is a transitory phase and 2022 will be different?
Markets are well valued at this point of time, even if I'm shy of calling them richly valued, which means that any bad news can impact the market. And see a continued upside movement from here looks very difficult for the market. And hence, it would be natural for market to take a pause, take some stock, have a bit of correction. But I believe that will be more sectoral than a broad-based sharp market correction. So I do not anticipate a sharp market correction. Some sideways movement, some corrections, some pause is how I would see the market going for the next few months. But not a rally and not a correction either.
Okay. Just juxtapose this, because you guys as a house would have in your discussions views on India versus the other Asia Pacific markets or the EM pack as well. Where does India stand currently? Because while COVID was a big scare, and rightfully so, we seem to be slowly just coming out of that scare. Even though cases are high, they've been consistently coming down. And as I see around me on WhatsApp with the number of, or Telegram with the number of hospitals opening up to vaccination, housing societies opening up to vaccination. We seem to be getting there slowly but surely. So where is India within the scheme of things vis-a-vis compared to the other economies?
Congratulations. That's a relief and a great news. We've had a very brutal round of wave two. So it is good that it's abating and life will move back to normal. Allianz is very committed to India and likes to be strategically invested in India. We have two very successful ventures in India with Bajaj as a joint venture. And even in terms of our investments and commitments to alternatives, to all kinds of investments besides just listed public equity and debt, we are very, very strong. So our commitment and our faith in Indian economy is strong, not just because of the demographics, which is definitely a big positive, but because we believe the fundamentals of the economy are very, very stable, strong, and we believe in the 5 trillion growth possibility of the country. We believe COVID could have delayed it a bit, but not derailed it. So we believe that it is a growth story that cannot be missed. The corporates are strong, the markets are maturing. There are a good number of participants here. So from equity point of view also, we remain very positive and bullish on India.
Okay. The last, some comparisons that people have done with the past seems to suggest that in a scenario wherein interest rates have actually moved up, the asset heavy spaces have done really well compared to the asset light pockets. Naturally, so you might add. Would you reckon that that could be the same this time around?
I don't see why it would be different, but it depends on how and how fast-paced that trajectory is. I think a bit of interest rate increase, inflation is all factored in already. But if we see sharp movements, I think you should see sharp reactions. But otherwise, I'm not anticipating a very sharp reaction.
So what's the base portfolio thesis, Ritu? Where do you think this will, how do you think, for example, that the Indian markets could do ahead? As you said, we are richly valued too in India as well, right? So if we assume that the markets are not going to have a one-way move upwards, what's your sense? Would there be a churn and the underperformers, the economy exposed, the unlock beneficiary related themes would now take over? Or do you reckon that the markets would still prefer some bit of certainty on earnings and in outlook?
In the market where you're not anticipating a sharp correction or a bullish run, one would expect a lot of stock-specific, sector-specific selection to come into the portfolios. Personally, I am quite committed, and I believe that banking financial services is a space that will benefit and continue to benefit both from the liquidity, the policies of the government, as well as the unlocking. Financial services specifically, even within that insurance, for example, are companies and sector that will come out stronger from this. Another sector could be IT. Valuations are rich, but so is the business potential. So one thing that the pandemic has taught all of us is the need for technology. It is now a business necessity. Even the laggards understand that, and that is for survival now. It is not a good to have. And I would expect investments in IT across the globe to come to the forefront, and upgradations, new technologies, work from home infrastructure needs to be built because most organizations want a significant part of workforce to work from home. So IT is a sector that I would be bullish about besides financial services.
That's interesting. We've had 2 or 3 large global brokerage houses come out and reiterate their underweight stance, but I see no circumspect moves when it comes to the stocks, and the managements are extremely bullish too. Just today, I think we were last week we were speaking to Persistent Systems, mid-cap IT or Emphasis, and everybody's talking about how the quantum of deal wins, etc., is just moving up. Ritu, that's interesting. Just on that topic, before we move on to something else, just on that topic, the platform-related businesses are now starting to come up in India. It's a very nascent thing, much like ESG, if you will, but they are getting developed. Some in the equity side, some in the B2B business, and some virtual exchanges of sorts. Do you guys have you looked at it at all? Because on the west side, on the Western world, there are very large businesses. India is just starting to come up.
No, we haven't. We haven't been investing in this in India or in Asia.
Okay, fair call. So what else you do? So BFSI and IT are the 2 large heavyweights in the Indian markets you are bullish on. Would you believe cyclicals like autos, for example, could now come to the forefront as we enter the unlock phase in India?
Both autos and capital goods, I would definitely look at with great interest because investment cycles have to be revived. So I would expect a fair amount of infrastructure investments coming from the government. They were announced, but now they hopefully will be implemented. So both auto and capital goods are sectors that I look at beyond financial services and IT.
Where are you circumspect? What are you circumspect about?
I would be a bit circumspect about sectors like FMCG, which have run up a lot, and because it was one a play in the lockdown which was conservative, and two, of course, we saw significant demand in those sectors. But I don't believe that that will be sustained, and there is growth beyond that. So I believe they are richly valued. Reality is a sector which I look with very mixed feelings. It is attractive in pockets. At the same time, like IT, one could expect a reversal in trend, especially in terms of office rental spaces. So that is a sector which one needs to watch carefully. And I'm very curious as to how it will develop. And it will be location specific. It could be different in pockets of Mumbai compared to Delhi, and depending on players there. So that will be very interesting play also. Logistics is not such a large sector in India, but I think another sector which will benefit significantly as we start unlocking.
Yeah, and I think there is this talk of one of the largest players getting divested as well. So that should be interesting. So two questions, Ritu, now. One is on this whole divestment drive, and which is bringing PSUs, all kinds of PSUs in focus. And then I want some thoughts on ESG as an upcoming theme. Firstly, PSUs or the divestment candidates or the beneficiaries of that whole divestment drive. What's your sense here? This time around, could it be for real? And would equity investors benefit out of this?
That is the hope and the belief, and I think that should play out better this time. We have a fair bit of experience of doing it now, and that is my expectation.
Okay. What about ESG, Ritu? For years now, it's been spoken about, and corporates say that we are ESG compliant. I mean, there are not too many companies who come out and say that we are not ESG compliant. How do you think the global set of investors who've been investing in ESG themes worldwide would apply the same to India? Do you see this becoming even stronger in the years to come?
In the investment world globally, ESG is a force to reckon with now. And it is not a glamorous thing to talk on dinner tables. It is how investments are being allocated. Allianz is deeply committed to sustainability and ESG. We, in fact, are leading the Net Zero Asset Owners Alliance with United Nations globally. And we have over $5 trillion committed to it with institutional investors across Europe and in US. Which means that all of us are committed to reducing our carbon. We are a carbon neutral company, but we want to reduce carbon even in our investments and in all aspects of our business. Clearly, equity is no exception to that, and no geography will be an exception to that. So this is definitely a change that Indian stock markets will also see, that companies that are more environmentally sustainable, socially conscious, better governance will attract capital more easily and at more effective rates as compared to companies that do not meet these standards. And I don't think this is just a matter of time, and this force will definitely dominate the market over the next couple of years.
Ritu, take a moment to thank you for joining in today and speaking to us. Much appreciate your time and stay safe.
Thank you. Best wishes to you.
Thank you. Viewers, thanks for tuning in to this conversation.